Welcome to our class, and we will be talking about partnership accounts today and partnership type businesses. Right? So, based on our previous lessons and our previous classes, what we would have been focusing on would have been sole trader or sole proprietorship accounts, right? So the main difference that we would see when we look at partnership accounts would be the aspect of our business entity concept coming into play. So when we talk about partnerships, generally we tend to put ourselves in the position or in the shoes of the owner because we tend to see the owner and the business as one entity. However, now that we move into our partnership accounts, we need to see the business and our partners as two separate entities, right? So, this would be one of the most distinguishing features of our partnership accounts. So, in this question that we'll be doing, I think this is 2002, question 5. So, this question is with Better and Harris. So they're in a partnership and they're sharing profits and losses in proportion to their respective capitals. So on September 30th, 2000, the following information was taken from their books. So they gave us the capital account balances, they gave us their current account balances. On October 1st, 2000, Besson and Harris, they admitted Dalbert, who brought in $20,000 in cash and furniture valued at $5,000 as his capital. So it was agreed that the three partners were to share profits and losses in proportion to their capitals. Each partner is to receive 5% interest on capital, and Beton is to receive a salary of 5% of net profits before any other appropriation, right? Net profit must include interest on drawings, okay? So during the year ending September 30th, 2001, Beton withdrew 5,000. Harris withdrew 12,500 and Dalbert withdrew 2,500, and the interest on drawings was charged for the year, right? So they basically worked out the interest on drawings, so they did not give us a specific percentage as they would typically do in these types of questions. Okay, net profit here, and they ask us four things. So the first one, we're asked to prepare the appropriation account for the year ending September 30th, 2001. We're asked to prepare the current account for each partner, complete with their balances, and make the journal entry to record the admission of Dalbert into the partnership and determine the rate of interest that was charged on drawings. So first things first, I'm just going to start off with the journal entry, right? So simple date details, debit, credit. So our date was October 1st because that's when he came into the business. All right, so let's give this some space. Okay, so he brought in cash. He also brought in furniture. And of course, our capital account will be credited. So he brought in 20,000 in cash, 5,000, and we credit our capital 20,000. So remember that cash would be the asset that is increasing as well as furniture. And of course, we would credit our capital account, right? Because his capital would be increasing as well. So now that we got that out of the way, we could start with the appropriation account. So first things first, we start with our net profit. So think about it logically. If we want to find out how much money the business would have to share among the partners, what do we have to do? We have to add everything that the business has to get from our partners, and we have to minus anything that the business may need to pay out to the partners, right? So if we start with our net profit of 75,000 in this case, right? So we are going to now add, let me just give this some. Right, so we add our interest on drawing. So then we're going to less interest on capital, same partners, and we're also lessen our salaries. In this case, only one partner was supposed to get a salary, and that was Beton. Right, so they already worked out our interest on drawing, so we just have to put the figures. Okay. Then now we have to find our interest on capital. So we go in back up into our question here. So we have our capital account balance. So Baton was 50,000, and the interest on capital is charged at 5%. Harris's capital was 75,000. And again, it's the same rate of 5%. And Dalbert, we would have had Dalbert's capital up front, up top. So it would have been 25 divided by 5%. Right. And of course, the salary. So Baton was supposed to receive a salary of 5% of our net profit. Right. So we just have to work these out. So this would be 2,500. Remember, these are being minus. So, right, so this would be called our residual profit. And as we know, the word residual means, well, something that's left behind, right? So this is our profit that is left after all our deductions. Okay, so that part ends there. And we still have to do our share of profits because we have to now send, we now have to divide this profit among each partner, right? Or among the three partners. So in the same order, Baton, Harris, and Albert. Okay, so this is a foolproof way of actually solving this without any issues, right? So if we want to find the ratio to actually appropriate each partner's capital correctly, so we know that Dalbert had 25,000, Harris has 75,000, and Betton has 50,000, right? So we just have to find the total of all three, which would be a total of 150,000. So each partner's capital would be going over the total of 150,000, right? So in this case, it would be 50,000 for, for Bethan over 150,000. And we multiply that by, just give this some more space. Right. And now we multiply that by our residual profit, which is 64,750. So we could have also simplified this because we could have just dropped the zeros here. So there are four zeros. So that would have given us 5 over 15. Or again, if we further simplify it, a third. Right? So 1 over 3 multiplied by 64,750 would give you the same answer as this would give to you. So our answer here is 21,583 and some decimal places, but I'm just going to round it down to 583. So Harris, we're doing the same thing. So it's 75. And we're dividing that by 150 and multiplying it by 64,750. And again, we could have simplified this as well. And same thing with Dalbot. And the total here should give you the same total that we have here, which would be the 64,750. And that is the end of our appropriation account. So pretty simple. We just have to look for the information that is in the question itself, right? So last but not least, so everything else is pretty standard when it comes to partnership. If they ask you to do, let's say, let's say a profit and loss statement, it would not be any different from our regular profit and loss that we're accustomed to with doing the sole trader accounts, right? So we have to do our current account as well. Okay. So with our partnership current account, this one is a little similar to our cash book, right? In terms of we still have the same side, so we have our side separated. So on this side we have date, details, but we have each partner's name here. So Baton, Harris, and Albert. Okay, so I'm just going to take out this column here so we can have some space. I'm just going to take out the date column so we can have some space, right? So for the first one, our details would be our balance brought down, right? So did we have any balances remaining, well, being brought down from the first of the period, right? So on our debit side, which we know again it's separated into debit and credit, we have two items outside of our balance brought down. We have interest on drawings and we have drawings itself. So on the debit side, this is everything that the business is expecting to get back, right? And on the credit side, this is everything that the business is expected to pay back. Okay, so we have interest on capital, we have salaries, and we have our share of profits. So again, we had our current balance, our current account balances. So we had 350 for Beton and we had 2,875 for Harris, right? So again, all this information that we did on the top part, we just getting back the information there, right? So we know our interest on drawings was 250, 625, and 125. And our actual drawings were 5,000, 12,500, and 2,500. Interest on capital. So again, we just going back here. So this would be 2,500. This would be 3,750 and the 1,250. And salaries, only Baton got a salary of 3,750. And our share of profit, so this would have been 21,583, 82, 375, and 10,792. Okay. So just by looking at these items, we already know that our credit side is the bigger side, right? So if we have to do balance carry down, we know that is going to be on the debit side. So, right. So again, our balance carry down would just be the difference between this side, between the debit and the credit, right? Okay. So our balance carried down is 22, 233, 25, 875, and 9,417. So if we have our balance carried down on the debit side, then we know that it's being brought down on the credit side, right? So balance brought down, and this one would be at the 1st of October 2021, right? Because remember, it's the beginning of the next period. Okay, and that is it for our lesson on partnership accounts. You could let me know if you're having any issues or you need me to explain anything.